Hi, it's Doug James from Deckchair Property Investors. Thank you for your time today. Really appreciate it. I want to share with you one of my very, very big passions, which is joint venturing. So I want to share with you why joint venturing, why I love it, and why I think it's the right way for majority actually of the people out there looking to invest in property, looking to make money back from property. But before I do, I'd like to give you my contact details, which I'm going to do at the end as well, because a lot of people have asked me recently if I can help them do a few things. So you can get hold of me via my email, which is joindougjames@gmail.com. That's joindougjames@gmail.com. You can also reach me via my business email address, which is doug@deckchairpropertyinvestors.com. .co.uk. That's doug@deckchairpropertyinvestors.co.uk. You can also reach me via my Facebook page. My private or my public everyday profile is facebook.com/doug.james.129. That's facebook.com/doug.james.129. And you can get me via my business page, which is Join Doug James. And that's at Facebook, and most of my social media is via that as well, so other methods, but it's mostly Facebook that I use. So what I want to share with you today, as I said, is about joint venturing and how to gain a deck chair lifestyle and why we have got about this and who we've done it for. So we've done it for ourselves first and foremost. I took this photograph of the deck chair. I'm going to show you some of my deck chair lifestyle pictures at the end, which will make you chuckle. I shot this picture in April in Thailand. And what I love about the deck chair lifestyle is exactly that. It is investing in property without basically having the stress and therefore making a residual income, making a truly passive income. I've been involved with a number of businesses which tell me that you can make a passive income, which you don't actually make a passive income because you still have to work the business every day. Well, I have a portfolio of properties. Those portfolio of properties are outsourced, the running of them by agents, etc. And I just get the money into my bank account. I get an odd email so often saying the tenants are looking to renew or they've handed their notice, we're going to remarket it if you so wish, and I reply yes, and bingo, it happens again. Magic, everybody makes their margin and I get my residual passive income, my profit into my bank account. So why have I done this? Because I love that deck chair lifestyle. I love that passive income. I love investing in other people as well. So I love the collaboration. I believe joint venturing. I believe we're in the century of collaborating. I believe that last century was the century of the corporation, and the one before was obviously industrial revolution. So the smartphone has enabled us to work from anywhere in the world and create an income while we're asleep. And to me, creating an income when I'm asleep is truly leveraging everything that I have the ability to do. And I love leverage. So for me, it is the ultimate for maximizing my time freedom. I used to run a business and that I founded, and I want to just rewind in time now and just give you a bit about me. Why am I here talking to and sharing with you, and what gives me the right, I suppose, to do this? Well, I left school with no qualifications and went and worked in a factory, and I learned very quickly that there was a better way. I was that person before computers and robots came around who were putting pen lids on pens, the blue lid on the blue biro, the red lid on the red biro. I didn't actually mind doing it, but I knew it wasn't for me. I knew I wanted to be wealthy. I knew I wanted to be a multimillionaire and live a millionaire's lifestyle. So I knew there was a better way. Well, I went to art school. I got a good qualification in the end. I worked for the best in this country, in London, and I did what I call an apprenticeship. I worked for nearly 10 years, but I took a year off virtually every other year or every 2 years, and I traveled around the world. So I was working with bosses that were mentoring me. They were giving me the opportunity to grow to be the best in industry that I was and could be. I then left and I set up my own branding business with the blessing of many of those bosses who were still mentoring me. Mentorship for me is about collapsing time frames. They're able to tell me what they did and how they did it, and how I'm able to save time, and I'm able to increase my income, increase my profitability by copying what they've done, saving me time, collapsing time frames. So I set up my own branding and marketing business. Super, super proud. I grew that over a number of years from the kitchen table. It was hard work. It took me 2 or 3 years to get off the kitchen table to grow that up to make a good enough income. But I was able to sell that business 2 years ago at the age of 42, retiring. And I'm super proud of doing that. And I was able to make from virtually nothing to retirement in 10 years. Now, why am I here talking about property? Because apart from joint venturing, I learned very quickly that I couldn't afford to pay a pension. And that was because I earned so little money that when I finally had enough money to buy a property, and I bought that in 1999 in London in Highbury. And when I bought it, Highbury in Islington, when I bought it, I realized a number of years later when I needed to move and wanted to move up the ladder to a bigger property, a bigger flat, that if I sold that property, that I would never have a way out of the system. And although I was earning money, everything around you just costs so much in London. So what I realized very quickly was I couldn't afford to pay a pension. I couldn't afford to pay £20 or £100 a month into a pension. And if I did, it wasn't going to give me much. So what I did is I realized that the only way out was to keep that flat, to take a bit of the money of profit that I've made in equity, to save a load of money and buy another property. And then I would have a pension that I would let out, my flat, first flat. It has served me brilliantly. It is I still own it today, and it's over 500% growth. I currently live in a free property. People ask me, how did that happen and what are you on about? And that happened because I basically took money out of the property in London, that same flat, and I bought the property that I live in today. It was at first a weekend and holiday place on the beach, and the deposit paid for it, but the rental income after tax pays the mortgage, the interest-only mortgage. I have a lifetime tracker on this property. So I have a free property, and I live in the free property. I've had it 5 years. We live in it full-time now, and it is worth £200,000 more than I paid. So you get the gist. I'm sure you understand, because you're all in this because you know there's a better way. Okay? So I knew there was a better way, and I set my own business up. And when I made money from that business, I used to pay myself and my wife, and we got dividends from the business, and we were able to invest that in more properties. So we had, 2x, then we had 3x, and so on. So we had multiple properties. We hit the 2008 recession, and the property prices all went down. Everybody said, "Oh my God, you're going to," Well, we were never going to sell. So we rode out of that, and we bought more, and we basically created a life of freedom. When I actually sold the business 2 years ago, as a top 5 branding and marketing agency in the UK, London, and worked with some European clients, we didn't have to sell the business to make money to retire. We had enough from property. The money from the business enabled us to just buy more and make more and compound more, or secure our future more. People say, well, you're a bit of the parasites that basically buy property and rent to people. You're stopping other people making money. I believe I'm actually doing a service of helping people get quality life products called My Flats to live in areas that they could not afford. Loads of my properties have hundreds of thousands of equity still tied up in them that I can never pull out because they're in London. But I like them because they're residual and they're solid. They're basically liquidable. So that is my background, that I love the property world. And why in the recent years have I come to love joint venturing? Well, it's like setting up my first business. I did it with another person. And I believe joint venturing is around literally focusing and working with people that are better than you, because it will make you money. I believe, as I say, this is a century of collaboration. So I want to just share with you a little bit more. I'm going to share with you some slides, and I'm going to share with you the content. But before that, I want to go through in this presentation, before I do, I just want to say why we set up Deckchair Property Investors. because it does what it says on the tin. It's a lifestyle, the Deckchair lifestyle, the passive income lifestyle, the armchair investor that we're wanting to be. And we've done that for ourselves and our family and our friends and wider now. So what is the Deckchair lifestyle? Touch on a bit more of that. The focus is around sharing with you how and why you might want to look seriously at joint venturing and the process to go through. We do it with our family, friends, and now we do it with clients because people have asked us to help them, and we love helping others, and we truly do, and I'll share with you why. We earn while you learn. That came out of helping others. We realised that they're paying for courses, they invest some money into deals with us, and they can earn along getting all the experience. So it's a bit like saying you're getting paid and doing an apprenticeship. You're getting the experience, you're getting on the SPV, you get the learning, you get the contracts, you get to do the site analyses and things like that, and you get to see the build out, you see the problems firsthand and how to solve them. Tax efficiencies, we all like to use these. They're built for everybody to use, so why don't we use more tax efficiencies? And then, is it capital or cash flow? So let's get on with this presentation and share with you why I'm mad passionate about joint ventures. They're about de-risking. Working with people that are better than you in areas of expertise is about de-risking. And de-risking by putting your money, for instance, or raising money and investing it in experts. So as I said, I work with people that are better than me in the areas that either I don't have the skills, don't want the skills, or even if I have the expertise and skills, which I do in a lot of areas, but I don't wish to use my time. So I say to people, you have three things in business, but they're the same things in property. Do you have expertise? Do you have time? And where is your money? Where is your wealth? Do you have funds to fund yourself? You may have all three, you may have none. You can still joint venture. How, people say, without any money? Well, you can raise money. I'm going to come on to that. Okay, so it's about also giving you and me time back. And therefore, it's about absolutely taking calculated risks with very secure partners. And how do I do that? I spend 3 to 6 months vetting. I look online. I track people that are saying what they're doing. I see what they're doing over a number of months. I reach out to them. I have a phone call. I go and visit them. I go and look around their sites. If I'm going to invest money, I do get them to prove that they're, not that their financial position, that they're, totally legit and accountable. You can do fraud checks. I do get them to talk with my solicitors. I do create contracts, or they create joint venture contracts. I do crawl all over them. I do get my solicitors. We absolutely find any nuts and bolts in them that I don't believe are fair and above board, that might seem to say that one of us, any party in there, has a casting vote and things like that. So any of that type of technical stuff, you can earn while you learn. You can invest through us and gain that knowledge, or you can just reach out to us and I'll share with you what it is and how we're doing it across any of the constituent parts. So calculated risks. Calculated risks give us calculated profits. Okay, so I believe it's de-risking, but increasing the profit return. Why and how? Well, people say to me, you get better profits if you did it yourself. I could, but I don't want to have a on-site building site problem. I worked with a joint venture partner. He was having sand and brick problems. He didn't have enough sand and bricks to supply the guys that were on the site contracting for him to build his new land development, and he was trying to solve it. I realised I've had those problems in the past, and I don't want them anymore. Again, my positioning is an investor, not a developer. I want to be the investor or co-investing so that I can get great returns. The other thing that's really key is you can work with investors that are outside of your geography, outside of your our drive. You can work with people in their goldmine areas, around the country, around the world if you want. Because around other people's gold mines that are further away from an hour away, I don't necessarily want to be there every day or every week. I definitely don't, in fact. Now, I met some people that I'm mentoring. They were been on courses with one of the big ones with Legacy, and they had been taught about HMOs. They went to Liverpool. They knew that was where there was going to be their gold mine, but they lived in London. And in the end, the deal fell through. But they spent months and months trying to assess, trying to get it all sorted. I pointed out the highly likely it wouldn't return the money that they thought, because it's so far away. It's likely to, not deliver on a few areas, which will deliver, therefore, slightly less return on money. Whereas if they had actually found a joint venture partner in Liverpool, if that was definitely where they wanted to be, and it's a specialist in HMOs, they could basically invest their money, learn and earn, and they can basically get, yes, a little bit less than they would if they did it themselves, but they would have less risk and therefore higher returns on that risk that they were taking. Eventually they can do their own, or they could actually recycle if they find good deals, like no money left in deals like we mostly invest in, recycle their money back out, and then they can go again and again and again. And the more times you recycle your money around, the more you're basically going to obviously make from it. If you raise money and you needed 100,000 to do one project, and you wanted to get X amount of money by 5 years' time, but you raise another 100, you're going to probably get to that X in 2.5 to 3 years, because you've raised money. And that is how you can collapse timeframes. Money collapses timeframes, and also mentorship. Mentorship, as I touched on, helps you learn what other people are doing. Hence why I mentor people for free, is because I want them to be able to learn from my mistakes and learn from what I now do and what I've done in the past that has actually worked. Copy the things that work, leave out the things that don't work, and you're going to reduce the failure, reduce the time of basically getting not the right return on investment. So for me, joint venturing is about working with local experts. It's about basically being able to work in wider gold mines where there may be better cash flow, there may be better capital returns, depending on what you're looking for. I believe joint ventures are about finding the right people. It isn't so much about the property, that is the product. But the strategy has to be about finding the right alignment with people. I do it, as I say, by following them on Facebook in the first place, seeing what they're about, and then I basically speak to them, then I go and visit them, then I do the due diligence on their projects and go around their sites and things, and then I basically dig deeper into their commercials and their accounts and their fraud checks and so forth. I look for people that are on the curve of the hockey stick. And what do I mean by that? I mean, I look for people that have got 1 to 2 years experience, have been doing it already with their own money, maybe other people's money, and they're looking for more money to expand their business, to collapse their timeframes to get to where they are. Sometimes they're not very good at raising money, but they're very good at developing, they're very good at sourcing, they're very good at the commercials. And out of that, I'm saying the curve of the hockey stick. You may have heard of this, but the hockey stick, where you hit the ball, that curved part down at the bottom, up to the handle where you hold it at the top, catching them coming out of that curve and shooting up towards the handle is where there is great wealth to be created. If they've got a 5-10 year run in them, if they basically, to get to their dream and their cash flow, their developments, they're very hungry, they're very driven, they're very passionate, and they're very good experts on property sites, developing them, then I'm going to assess them, and that's the people. They're going to drag, if I put 100 grand in with them, it's going to drag my money up that hockey stick handle. It's going to return the growth that they're going to return for themselves. If it's good enough for them, and I've checked them out, it's going to be good enough for me. If I can add any value through mentorship, if I can add any value through my expertise, then brilliant. But most of these are already actually in their stride. I do work with people that are earlier in their phases, and I give them free mentoring to help them fly. Why? Because I want to find more deals. What's in it for me? I want to help people grow. Why? When I set my business up and I nurtured and grew talent in my design and branding business, I love the reward of seeing young people become the best that they can be. Some of those people in my first business are some of the best in this country and in the world in their sector in branding and marketing. Isn't that such pride? No money can pay for you back for that sort of stuff. I have, I think I said I retired at 42. Selling my business, so I have a great residual income. It is boring. I love this saying. It is boring playing tennis on your own. You want to help other people get to the same position. to have financial freedom, to live life on their own terms, to go on holiday, create memories with their family, to buy the cars, the toys, the houses that they want, etc. Then, what fun are you going to have with those people growing and helping them grow their business? Isn't life about having fun? It is for me. So for me, it is about people, people, people. It is about creating a help strategy, or a win-win-win strategy. Win-win-win, help is, if I help somebody by getting 8%, if they lend me 100 grand, I give them 10% on their money, then aren't I helping them get a better return on their savings? Well, most people, 99% or more of the population, just save. They're not entrepreneurs. They're not looking to joint venture. They don't want to take risk. They will lend you money for better returns than they're getting on their bank account. I use a saying, do you know anyone? And I practice this with all I mentor, and I get yeses off of virtually every single person. Do you know anyone, is the question. Do you know anyone that wants to get more than 1 or 2% on the savings or money in their account? Do you know anyone who wants to make 5, 6, 8, or even 10% interest on their money in their bank? I get a yes every time. There's more people that have money, £100, £1,000, £100,000. They have money that they would like to get a better return on than there are deals out there. I don't like sourcing deals because it's too deep, too much time relationship building with estate agents, and I don't necessarily trust that well, and I don't want to write letters to to distress people to try and buy their properties below market. There are thousands of great people in this country that are trying to build businesses in sourcing that are better than that than me. You may be one of those people. I love working with you. I respect you. Your tenacity, your drive and resilience is brilliant. Work with those type of people. I believe I can fund the deals. I believe I can find contractors. I work with developers. They find the deals. I like to just pick the cream off the crop that fit with my investment strategy, and then I align my money with them, and we both win. So I take money in at times from friends and family, and now wider, and I do it through FCA regulated approach. I'll touch on that later. And then I basically put it into cracking property investments where the developer probably couldn't raise the money, didn't want to raise the money, or likes having a joint venture partner. I fund it, they build it out, we get on brilliantly, we then mature the product, we might get the legacy, meaning keep the flats and keep the income, the build to rent, office conversions to rent, we pay the investors back their money, we give them the profit, the interest that they were looking for, we craft and pay them a little bit more so they feel over the moon, they lend it back to us and we go again. What it gives us is a win for the person who's saving and getting more, a win for that developer, a win for me in what I'm after, which is cash flow. At times I'm looking for capital growth, but I'm looking to grow my cash flow. Cash flow is what you can spend. Cash you can spend. In all intents and purposes, I'm a 7-figure entrepreneur with paper wealth, but it's the cash flow that I live off, that I get to go on holiday with my kids, etc. I work with a genius of a business partner in Deckchair Property Investors called Giles Murray. That guy, 25 years running Lakeside and Brentwood Carding, started them from scratch. That guy has got more skills in operations and marketing and tenacity, but he loves, like I do, about building wealth that you earn when you're sleeping, when you're laying on the beach, we call it. Passive income, truly passive income. So that's why we love joint venturing. It's about meeting the people that you can collaborate with to get 1 and 1 equaling 3. Friends, family and clients. Well, we work with friends, family and clients. Why and how? Well, lots of them came to us to ask us to basically do what we've done for ourselves. To be honest, 99%, as I said, or more, just want a better return on their cash. The majority do not want a joint venture. The majority are not entrepreneurs. So we do exactly that. We give people better return on their savings. And what we say is we've created a 3 tiered level, and that is basically somebody who saves with us. So we've created DPI, Deckchair Property Investor Savings Accelerator. See what we've done there? They don't want to invest with us. They just want to save and get a better return. They put their money currently in a bank. They answer that question that I said earlier with a yes. So we offer them, 5 or 6% if it's low, 1,000, a few hundred quid, 1,000, 5,000, 10,000. If it's basically 50,000, we will give them 8%. Wow, that's huge compared to what they're getting. If it's 100,000, we'll give them 10%. That is unbelievable. Honestly, a lot think you're talking rubbish. So I think you should always start with lower numbers, and when you feel it's right, you offer more. But a lot of people will quite happily snap your arm off for 5 or 6% because they're only getting 1 or 2 in the bank. If they invest or want to save more than 100,000, we will quite often give them an interest payment at the 10%, guaranteed. And when we know what the deal is we're investing it in, and we see the profit from it, we'll look at whether we are giving them how much extra profit share. So some, want to put more in because we're giving them more back. And then what we do is we look at people who genuinely want to joint venture, who genuinely are entrepreneurial, who genuinely want to learn the industry and how they can make real money. And those people are always over 100,000. But we take very few joint venture partners because most, and I mean this, most just want to get a guaranteed return. But that's what we do. And we did it because we're doing it with our own money. We did it with some family and friends. We have widened that out because people have come to us from some of the marketing on social media that we do. But most importantly, it's just our circle of influence, our circle of friends have said, Doug's got a cracking thing here. If you're looking for a little bit more, if you want to make a bit of money off your savings, you're saving for your Christmas or your holiday fund, why don't you, save it with Doug and he'll give you 6% on top of that back. So it's a great way for people to get more. I'm helping people make more saving. I'm helping developers, as I say. Earn Where You Learn. Well, that came out of basically the free mentoring program that we offer. The people who really want to get on and get going, well, they're all doing courses, or lots of them are paying legacy, progressive, etc. I believe in courses. If you want to become an expert in a sector, an area, HMOs and stuff, but they are not strategies. The wealth creation and cash flow strategy is sourcing money and sourcing deals. So we help people get the courage, the skills and the commitment, use our tools, use our processes, use and work with me if needs be, and we partner them so that they get to raise money, to help people save with them. And then quite often they will ask us to find a deal. They will invest with us and we will basically find a cracking deal. They can follow it from the equivalent of the sourcing stage all the way through to the legal contracts to build out and so forth, so that they can then see that the money coming back, through us, they get their money back, they pay the investor, we recycle the money out, they get the profit that's their share, meaning their interest, that they then pay back to the investor. So they're earning and they're learning, like in a paid apprenticeship. So this came out of working with a number of people who said, we've got some money, we'd love to actually follow you and learn all the stages, and that way we can get some money. So they invented, the people we were mentoring invented Earn While You Learn, which we absolutely love. So as I said to you, earning while you're learning is about collapsing timeframes. So tax efficiencies and investing, we all like to use the tax efficiency we can. We know you can use pensions, SAS. I've become a bit of an expert in it. I'm working with a multi-millionaire that runs a FCA-regulated investment business, and that investment business has a platform that you can use a SAS to do, so releasing your pension in through a SAS format. We're doing a collaborative SAS. He's FCA, as I say, regulated. He's the chairman, long in the tooth at it. I'm the investment director, and we're doing it because a friend of mine had and has a pension with nearly $250,000 in it. He hasn't got any other savings. He isn't in a position where his SaaS could be lent to, he could set up a SaaS on his own. He has no entrepreneur skills. He has no property skills. He wants to get into it. So we've set it up with the right governance. This has enabled me to then realize that we can actually do a collaborative. We could bring in up to 10 people. Currently, we have 5. Reach out to me if you would like to know more about pension use and how we do the collaborative. They're all separate. But we can pool the money if we so wish, or we can use it all separately. And it's a fantastic, and it's deep in knowledge. So there is FCA governance and regulation. It takes 3 to 4 months to go through the process to be able to be in a position to do this. But if you ever want to know more, reach out to me specifically around that, and I will help you. You can use your ISA, current ISA savings. You can use your new future if ISAs. So, you know, people can save individually 20,000 in the cash ISA, a couple 40,000. Why wouldn't you want to use that? Now, I've learned a lot about crowdfunding, so collaborative investing. So people say, oh, you can't basically bring 1,000 peons in off of 100 people and have 100,000. Rubbish. You can through certain methodologies. I have those. I'm aligned with an FCA, Financial Conduct Authority, crowdfunding site where we can basically bring those people to the deal that we have, or we can raise the money and they can invest through their ISA through that platform, and it becomes tax efficient for them. So it is an incredible way. I won't go into detail on it, but if you want to know more, reach out to me. But look, if you're offering somebody 8% and they're a 20% taxpayer, they're going to make themselves a huge extra saving, aren't they? You know, if they're a 40% taxpayer and they're getting the money back, the profit is back with 40% tax-free through the ISA, and even more you can get through pensions relatively. Capital versus cash flow. This is absolutely the king of the lot. You need to know where you're going, what you're trying to get out of life. And I talk about creating a postcard as the methodology, the tool to capturing your vision or your dream or your why. Go onto my Facebook page. As I said, you can find me at JoinDougJames at 129 on Facebook, or my business page at JoinDougJames. Go onto that. Look at my video and the written text on how to create a postcard. It takes 5 minutes. The 5 minutes is the best 5 minutes you're ever going to spend in your entire life on where you want to get to in the future. Because if you know the dream house, the dream holidays, the dream car, the dream toys, the bikes, the memories with your kids, the adventures and so forth, if you know that, and it's writing a postcard home to yourself in 5 years in the future. Hi, Doug. I am a professional property investor. The I am is a belief bit. It's really important. I am a professional property investor. I can't wait for you to get here, Doug, and you can enjoy the lifestyle that we have created from property. We have a house here. We have another holiday home here. We go on 8 holidays a year. We go skiing multiple times. We basically have a 6-figure residual, multiple residual income from property. We love life to the full. George and Leela, my children, are growing up so fast, but we have done so many adventures in that time. Do you see the postcard I'm writing home to myself? Find a couple of photographs that go with it. Now, follow it through. Talk about, in my post on it, printing the postcard out, putting it by your bed, reading it 21 times so you get it in the muscle memory. So you really believe it. That's your dream. Now we're talking about the cash flow for that dream. If that is 5,000 a month, 10,000 a month, 20,000, 30,000 a month to have that lifestyle, what you know is you can do these postcards when you've reached a goal. I have done 3 of them previously, and when you do them, they're a 5-year postcard. When you do them, you realise that to get the cash flow, you might need to recycle £100,000 around 10 times. Well, that might take you actually 100,000 recycled, so no money left in deals that you're buying as joint ventures or doing on your own. I prefer joint venturing, as I've told you why. Passive income, get to live life on my own terms. By investing it, I recycle it around, say, in 12 months. Well, if it gives me, 500 or 400 or 700 or 250, I can work out how many more of those recycle rounds. So let's say it was 500 quid, and I get that as a legacy, so cash payment from my property income. So I'm going to recycle it 10 times. 10 times would mean 10 years. Well, compound effect will probably bring it down to 6, 7 years. So if we said, well, we raise 100,000, or people save with us, 100 people through the crowdfunding platform save with us £100,000, and we invest that, we pay them back 6, 8, 10%, and we basically can make more. We pay them back, we pay them the interest, we get the £500 a month cash flow. Well, if I've got another 100 and another 100, well, take one that I've got my own, another one that I raise, well, I can collapse the time frame. Money collapses time frame, as I said earlier. So I can collapse the time frame from 6 maybe to 5 to 4. I could bring it down to 3 to 2. It's repeating. And if you can raise or help somebody get 5% on £1,000, you can help them, repeat that. You can do it 100 times you ask the question, 1,000 times you ask the question. You will find the people that will basically want better returns on the money in the bank. You then use the FCA regulator to talk to me about how, use it, and then you have the funds. You can co-invest with me. I will help de-risk it further. I give you more confidence. There are multiple people out there. But when you know the cash flow, you now can aim for the cash flow you require. When you know the capital, and I want a bit of I want a lot more cash flow. I've got a big new goals that I'm going for. I also want some cracking growth in my capital. So I could take maybe a chunk of my capital, and I'm going to show you a couple of deals now that I make major cash flow return on. So 145 grand in, 4 months return, commercial to resi conversion. It's actually going to be a serviced accommodation. It was going to be sold in the first place, but we found some more serviced accommodation on the street. We can therefore let it. We've done conservative numbers. Conservative numbers should deliver us, both myself and the joint venture partner, £1,000 each. That's actually £1,000 between myself and my business partner. So I appreciate you for this, and I've got more to share with you and show in the future. But this is what it's all about. It's about doing these type of deals. This one is a venture that we're investing in, which is a commercial to resi, which is a sell. It's a 307M, but it's got a 65% return on investment, a 200,000 return on investment. So that's a 12-month deal. It's a cracking one. Who wouldn't like these type of returns? We have a student property, and it is cash flowing after 2 months. We've just done this one. It's going to be refinanced. We found a plot in the garden, obviously, straight away when we were buying it. We're putting the planning permission in now. We're going to go through using development finance. This will deliver us, circa 1,700. It's already cash flowing 850 a month. It will therefore give us all our money back out. It will also give us a profit out of the property that we build. So we'll have capital out, and we will have cash flow for life. And that is half to us and half to our joint venture partner. Okay, I want to just share with you the last couple of slides here. The lifestyle that I love, and the reason why we called it Deckchair Property Investors. I love the lifestyle of living life on my own terms. Even my son, my daughter, you might have just heard her, she's just come in from school. I love this life that we lead, and I can't wait to build further wealth, but in particular help other people get to the same future that I have achieved. I'm a guy who left school, as I said, with no qualifications. If I can do it, you can do it. It is not fun playing tennis on your own. So wouldn't it be good to help other people achieve the same sort of return, the same sort of success, and play tennis with them? Have fun and live life on your own terms. I really appreciate your time. Thank you very much for listening. For anybody that, and I've had a couple of people message me in the recent past just from sharing this story, so in the last 24 hours. So what I want to say to you is, excuse me a minute, what I want to say is thank you very much. Here is my contact details. I said I'll give it to you again at the end. It's my Facebook is Doug.James at 129. My business page is JoinDougJames. You can get me via my personal email, which is joindougjames@gmail.com. You can get me via my business one, which is Doug at DeckchairPropertyInvestors.co.uk. Always search the hashtag Deckchair Property Investors, because we have loads of learning actually on our .com.co.uk site, so deckchairpropertyinvestors.co.uk and .com. Go to there. We have a free ebook on the 7 secrets to property investing. We wrote those. I think you'll love those. Reach out to me if you want to learn anything more, if you want to talk about my mentoring program, if you want to co-invest with us, if you want to find cracking deals. If you just want to have a beer and have a chat, reach out to me at any time. Look forward to hearing from you, and thank you very much for your time. Speak to you in the near future.